Hi, Shae Russell here, editor at the Daily Reckoning Australia. And joining me today for your weekly market chat is your other Daily Reckoning Australia editor, Callum Newman. Callum, how are you today, mate?
I'm very well, Shae. Yourself?
Not too bad. Now, we threw out a challenge to our viewers a couple of weeks ago about what should we talk about next week. And I believe SmallCaps was the winner. And I've got to be honest, I'm very disappointed, everybody who's watching, that it wasn't battery metals, because I have just been reading about battery metals non-stop for a month and I had lots of fun facts to share. So next week,
we'll do it.
But today we won't hijack it onto battery metals. We will stick to what people want. Now, unfortunately, I might not be the best person to talk about the small cap market, because when it comes to small cap, I'm quite focused on what's happening in the resource sector. But I do know, Callum, that you cast a wider net than I do. So tell me, let's start with, what are you seeing in the small cap sector in the moment? I mean, the Aussie, the broader Aussie index has enjoyed some good times. But it's coming off the boil a bit. So are we seeing that same sort of sentiment filter through to the small cap sector of the Aussie market?
No, there's still some ripping potential gains in the small cap sector. It's always volatile and it's very much stock specific. I think with small caps, you have to really know what you're buying or investing in or trading or whatever it is you're doing. But broadly speaking, I think the momentum is still there. And since the COVID collapse, I mean, some small caps have had some ripping runs, and I'm still seeing some evidence of those. Of course, there's always landmines out there and setbacks, but definitely from my view, there's still lots of opportunity.
So let's talk about why investors would want to consider small caps, especially too when you're just starting out. Now, a lot of people I know, from experience based on people I've spoken to over the years, they're attracted to essentially the blue chips, the big name brands that they've seen the names of driving down highways on their way to work when we used to go to an office. But why should investors consider looking at the small cap sector of the market?
Well, you can make some really fast gains and big gains. And it all depends on, what you're looking for. If you just want to have a bit of a punt, or if you're looking for a long-term position that can grow, look at Afterpay is like the greatest small cap of all time. It went from 2016. Now it's over $100. So, I mean, that's the dream of everybody, right? To buy the little baby stock that grows into something that's really amazing. And I mean, very few stocks can do it as fast as Afterpay has done. But there's lots of opportunities on different timescales, whether it's short term, quarter by quarter, longer term. You've just got to work out what works for you. And you just get such a breadth of industries in the small cap space. Like Australia, with the top 50, is heavily dominated by the big miners and the big banks. Companies that are very mature. As we know, a lot of Aussie companies don't really flourish overseas for whatever reason. So then they're sort of bound by how much they can grow their earnings within the country. A lot of small caps here in Australia have a big runway in front of them, whether it's from international exposure or just because by the fact that they're so small anyway, that they have lots of room to grow. For example, I was just reading about today the credit markets in Australia. There's $3 trillion outstanding in credit, in Australian credit. Now, a bunch of that is mortgage debt. So if you find a small company that could take some of that share, that's a big pie to grow into, if you know what I mean. So there's lots of opportunity. But mainly you're looking for, what I'm looking for is companies that can go up really fast and growing at very high rates relative to like a blue chip, which is always going to be usually a slower journey.
Now, you did mention Afterpay before, which is funny because I know off camera last week we talked about how Afterpay will probably be one of my biggest stock regrets ever in the history of stock regrets.
Yeah.
And I know of many people who feel that same way. But Afterpay is a great example of obviously everything that can go right for a small cap, but also too about how when it comes you're looking in, apparently I'm tripping over my tongue, but the Afterpay example really points out to how you're buying into a story into the small cap sector rather than how the financials look, isn't it?
Yeah, a lot of small caps run at negative cash flow, so you're not buying earnings in the traditional way that Warren Buffett is famous for, where he goes, it makes this much and I discount this back. Like at a certain interest rate. So, you can call it a story. It does depend. I mean, they do post other metrics that might be important for them. It depends on sales is usually, or revenue, going to be a big one. So there are data points you can use, but yeah, you have to take a view on a particular industry that it can grow and that they'll grow with it. So Afterpay, we know, with the buy now, pay later sector, has become a very big thing. But so you have to have a certain vision to see that if you were going to take a risk on the stock. Now, buying a stock that's not profitable might sound risky. It is risky because obviously they rely on external financing. But if they can meet their metrics that they present to the market will usually support them by, they can raise money or debt, capital, whatever. As long as they're hitting their targets and the market can see the future profits or the potential future profits, you should be fairly solid. Of course, there are small caps that do make money. So, for example, we know when you cover the gold sector, there are small cap gold stocks that produce gold profitably. So, and if you get an uplift in the gold price, obviously their profits go. So there's different ways you can play the sector.
I think you've actually made a really, really good point there. So for starters, obviously small caps are risky because there's no standard metric to measure one to the other. If they've got no earnings, you've got to look at other potential opportunities for growth. But also too, as much as I would love to turn this into a quasi chat about the resale sector, it pays for investors to have a keen eye for disruptive technology and disruptive companies in the small cap market. Wouldn't you agree?
Absolutely. So, I mean, I always just say the market's always looking for big growth, and you can get that when a company comes along and does something in a disruptive way, as you said, or in a new market. So, for example, I talked about cannabis before. That is a new market. So, and in a sense, they're disrupting, other more traditional, trying to disrupt other traditional remedies and things, or even enjoyments like, the cannabis industry would love to take profits off the alcohol industry. But that's exactly what you're always looking for. Any sort of company that's breaking open a new market or doing things in a new way that can do it better, faster, cheaper, and win clients and ultimately revenues and profits.
Now, I think we might actually be able to stick to our allotted time slot today, so that'll be new for both of us. Before we change the subject and start talking about what we're going to talk about next week, what do you think are the potential sectors ripe for disruption in the small cap sector? I mean, you look at, there's some, obviously tech stocks might have been a little bit too hot overseas. And we're looking at great fintech stocks out in the small cap market. What sort of sectors are looking quite hot out in that smaller area?
Well, I keep coming back at the moment to cannabis because I'm very interested in that sector. There has been a lot of opportunity in the buy now, pay later. How long that can keep running for, I'm not sure. But there are two ways to play the small cap. You can look for stocks that have their earnings. So one sector I've been looking at lately is strangely the iron ore sector, because the iron ore price is so high that a lot of them are making large amounts of money. And I don't think the market's really that excited about iron ore. Everyone's still waiting for it to come down all the time. So there's still potential for a re-rate to happen there. But yes, when it comes to disruption, I certainly think the medical sector is seeing a lot of that. I was just reading about a stock, actually. It was talking about some of the tech to do with imaging, and some of the inventions and sort of processes that we use there, they go back to the 19th century or the 1970s and the 50s. So definitely I think healthcare is, if you're looking for disruptive stocks or companies that can take modern tech like AI and machine learning and all those things, really have the potential to break open there. And because also too, that anything that can drive down costs in that sector is going to find a ready market. So if you're looking for disruption, two ideas are cannabis or healthcare in general.
And I'll just add onto that as well. Like, I don't have any disruptive technologies to offer people watching, but in the small cap sector, as risky as it might be, this is where some explorers turned developers can offer quite a good opportunity for patient investors. I know I've talked about in other videos that I believe that there's, not so much a commodity super cycle underway, but there's certainly going to be numerous commodities that I think will see long-term higher prices. And the ASX is littered with many, many mining and metal companies. So if people are willing to be patient, they should definitely consider developers or late-term explorers in the small cap sector to take advantage of that.
Absolutely. We should say too that you can, we talked about before, you talk about mining cycles, you can choose to invest at the very high risk, potential high reward exploration side of things, or you can wait for a project to get de-risked until it is going into development and you get a better sort of eyeball on the potential cash flows. Probably you'll pay a higher price, but it can still be profitable. So, or you go straight to a producer and look for some other way it can re-rate. So whatever your personality and your time frame, you can find a way to meet the market, if you like, in different ways.
Now, tell me, Callum, what are we going to talk about next week? Now, I know I did try and drop the hint about chatting on battery metals. Are we going to leave it up to people to decide? Or I did notice there were a few comments that came through via our email and on the chat, or comments below, I should say, that apparently we should be talking about crypto. So do you want to delve into crypto next week?
Not really. I wrote an issue about Bitcoin a couple of years ago now, and I sort of said, get in now, and that's gone on very well. But I don't follow the crypto projects very much, so I don't have a lot of intelligent things to say about them. Mainly because I decided I wanted to focus on ASX stocks exclusively. So I would say battery metals because I can give a lot more informed about those than the other cryptos besides Bitcoin. Yeah,
look, I'm with you. While I am all for crypto, I don't have this crypto versus gold view. I think they both actually have their place. I don't know the first thing about crypto more than anything other than Bitcoin. In fact, I lost my Bitcoin because I threw out the passcode key or whatever it's called. So I don't think I'm the person to talk about crypto either, but I'm pretty sure I can rustle up maybe a crypto expert to throw into the mix over the next few weeks.
Absolutely.
So how about this? Rather than us talking about crypto, we will go get a crypto expert to bring on who will add far more value to the conversation than you and I can. I reckon we delve into battery metals. That's perfect for me because there's so much around that topic that I can talk about.
Let's start with one, right? Like, because it's such a big topic. We're talking nickel, cobalt, lithium, manganese, all this stuff.
Go for it.
Should we go lithium first?
Oh, yes. We can go lithium first because that was forgotten, then very much loved, forgotten, and then now it's starting to see a bit of a boom again. Happy to talk about that. Look, I will be quite honest to anybody. Ask me any question about battery metals and I've probably got an answer for it at the moment because it's an area that really excites me about the opportunities for investors there. Incidentally, some of them are small caps as well.
Yeah, you bet.
All right, Callum. Well, I think for the first time ever, we might have come in under 10 minutes. Maybe not. I didn't actually time us this time. So thank you very much for joining me.
Absolute pleasure.
And everybody, I'll see you next week. And this time, Callum and I have taken the power away from you. We are going to talk about battery metals. We're going to start with lithium. So make sure you join us next week. See you then.